and thanks for tuning in to our weekly mortgage and economics segment. I'm Megan Abdelaziz, RealEstateSINY.com's mortgage and economics reporter. The mortgage rates have gone up yet again. The 30-year fixed rate is now at 4.74%. The 15-year fixed rate is at 3.75%, and the 5-year adjustable rate is at 3.69%. The rates increased due to the rise in the bond yields and investors' worries about the quantitative easing program. This week, the mortgage rates moved up mostly from the interest rates, so we will take a look at that first. When looking at the interest rates, we took a look at the 10-year U.S. Treasury bond yields since they correlate more with the mortgage rates. From Wednesday, August 14th, when we saw the yield at 2.71%, it had increased to 2.88% on Monday, August 19th. From there, it went down just slightly, but then came back up to 2.87% by Wednesday, August 21st. With the yields almost at 3%, this is the highest they have been since July of 2011. Now, as the interest rates increased, the stock markets decreased. The Dow Jones went from about 15,332 at opening on Thursday, August 15th, all the way down to about 14,897 by closing on Wednesday, August 21st. The S&P 500 for those same days went from about 1,679 at opening Thursday to about 1,642 by closing Wednesday. This turnaround in the financial markets is from the worries investors had about what the minutes from the Federal Open Market Committee meeting would say. Well, when they released the minutes on Wednesday, August 21st, it said basically what they have been saying in recent reports and statements. There is still no definite end to the quantitative easing program, but should the economy continue to increase and strengthen in the coming months, they might be cutting back on their security purchases and possibly phasing out the program by sometime next year. To see how the economy is doing lately, we took a look at two housing reports that were released this past week. The first on new residential construction, and the second on existing home sales. On Friday, August 16th, the U.S. Census Bureau and the Department of Housing and Urban Development released their new residential construction report for July. In this report, it talks about the building permits, housing starts, and housing completions for privately owned housing units and single-family housing units. First, we looked at the privately owned housing units results. In July, there was a 2.7% increase in the permits authorized, making the annual rate of permits authorized 943,000. This is 12.4% higher than it was by the end of July of last year. For the new residential housing starts, there was a 5.9% increase, pushing the annual rate up to about 896,000, which is a 20.9% increase from last July. As for the housing completions in July, there was a 1.8% increase from June, bringing the annual rate up to about 774,000, which is a 15% increase from last July. For the single-family housing units, July's results were down slightly. The permits authorized decreased 1.9%. The housing starts decreased 2.2%, and the housing completions actually increased 5.9%. The second housing market report was released on Wednesday, August 21st by the National Association of Realtors. This report was on the existing home sales for July. The existing home sales increased 6.5% from June, making the annual rate for existing homes sold nationally 5.39 million. This is 17.2% higher than it was last year. The national median existing home price decreased to $213,500 from June, when it was $214,200. As for the inventory of existing homes for sale at the end of July, it increased 5.6% from June, but is still 5% lower than it was at this time last year. After looking at the housing markets, we took a look at Gallup.com's report on Americans' confidence in the economy. This report was released on Tuesday, August 20th, and is for the week of August 12th to August 18th. Americans' confidence slipped back down this week after last week's more positive views. The poll on Americans' net ratings of economic outlook came in with results of 42% of Americans thinking that the outlook is getting better, and 53% thinking that it is getting worse. The poll on Americans' net ratings of current economic conditions came back with results that were very similar to 2 weeks ago, where 19% of Americans feel that the current conditions are excellent or good, and 34% think that they are poor. With the results from these two polls, it gave Gallup an economic confidence index of -13, down from the -10 it was at last week. Lastly, we looked at the Mortgage Bankers Association's weekly mortgage application survey for the week ending August 16th. This report was released on Wednesday, August 21st. In this week's report, the amount of mortgages and refinances applied for dropped yet again. The market composite index decreased another 4.6%, and the amount of refinanced shares for the total mortgages applied for came in at 62% this week, after being steady at 63% for the past month. As for their refinance index, it went down another 8%. These drops are from the mortgage rates continuing to get higher. So it seems that the housing market is doing okay and increasing slightly each month. Americans haven't really gained back any optimism in the economy, and the mortgage rates are going to continue getting higher. Next week, we will look at some more housing data and the second estimate of the GDP for the second quarter of 2013. So we will see if the mortgage rates stay around where they are now or increase even further. Make sure you check back with us each week at trendingsiny.com and here on YouTube to see where the mortgage rates will go next. Thank you for watching, and be sure to like us on Facebook, follow us on Google+ and Twitter, subscribe to our YouTube channel, which you can do by clicking the button under this video, and follow our blog at trendingsiny.com. Once again, this is Megan Abdelaziz with RealEstateSINY.com. RealEstateSINY.com is a full-service real estate brokerage located on Staten Island. If you're looking to buy or sell your home, you can contact us at 718-966-9669, and one of our experienced agents will gladly help you. If you simply just want to browse the latest listings or keep up with the market statistics, you can visit our website at realestateSINY.com.